All right, everyone. So welcome to this free webinar that I'm having here. I'm hosting for everyone. I've been getting a lot of messages every single day that's asking how I'm making a lot of money through Forex trading. And I thought I'd make this webinar to start helping you guys out. This webinar is going to be, even if you're brand new, you're going to kind of understand some of the concepts in Forex. But you know, there's more training involved. This webinar, it's going to cover some strategies that can already help you out with profiting. But this training here is going to be giving you some of those tools that I've been using to already start profiting. And you guys can copy the same thing and just duplicate what someone successful is already doing, right? So obviously you guys have seen I'm making a lot of money through Forex trading. I'm also helping a lot of people. My name's Ricky Andrade. If you guys don't know, people call me Ricky the Investor. I'm the CEO and founder of Market Masters Academy. If you can see, our mission is to teach only dedicated individuals the blueprint to invest in the markets. And I'm planning on helping people out with real estate. I'm doing Forex training right now, mainly doing Forex training. Then later on, I'm gonna get into like binary options, teaching people how to create businesses and investing in themselves. So let's go ahead and continue here. So about me, obviously we're gonna go into the training, but so you guys know who I am. My name is Ricky Andrade. I've been practicing Forex trading for the past 3+ years and also consistently earned high six figures per year. I've taught, like I mentioned, over 100 people already make six figures, and I'm an investor in real estate, business, Forex, binary options, and myself. And by the way, you guys should already know this. You're your biggest investment. I've paid a lot of like mentorship programs. I've purchased a lot of books to continue expanding my knowledge. So you never want to stop growing. You always want to continue learning. So let's go ahead and move on here. So this part here doesn't really have much to do with, you know, what I'm going to talk about with the advanced strategies, but it's to get you guys the concepts to already have this in your head. If you guys haven't heard of this, the cash flow quadrant, it's by Robert Kiyosaki. He's an author, entrepreneur, makes tons of money. And he has this book called the Cash Flow Quadrant. He also has a book that he's known for called Rich Dad, Poor Dad. Maybe some of you guys have heard of that. Anyone in here know about Robert Kiyosaki? Put a 2 in the chat box. Nice. We got a couple people that heard about it. Nice. Stephen, Brandon, Deshaun read both of them. Awesome. Yeah. The Robert Kiyosaki has some great books. There's some other great entrepreneur authors out there, but Robert Kiyosaki is one of my top ones, and he teaches about the four ways to produce cash flow. One of them is the E for employee. That's trading time for money, as you can see here, trading time for money. Self-employed is also trading time for money. So think of a plumber that's working for a company and then he decides to quit his job. Self-employed is him having to do his own job. So he has to put in the time to make his money. So if you can see this left side, it shows 5% of the wealth. 95% of the population is on the left side. So I know you guys are seeing like big cash on my Instagram channel or like Facebook or Snapchat or whatever, where I'll post about my income and making over 20K weeks. And that's because I am not doing this side of the quadrant. I'm not employed. I do a little bit of self-employed stuff, but mainly focusing on the right side. That's where you will make the most money. So on the right side, if you can see, that's 95% of the world's wealth are with business owners. That's trading people for money or having a system in place to make money. And then we have investor, it's money to make more money. So getting into Forex trading, you're investing money into the market and you predict to buy or sell the market. And I'm going to teach you guys some strategies to already start predicting the market, to get into investing and then flip the money to make more money. So that's really the main goal. And if you can see the difference between both of these sides is, one is time. The left side is mainly time for money. The right side, you don't really have to put in time. Like business owner Ray Kroc, he's a owner of McDonald's. He's not, he has a system in place. He has employees working at minimum wage. And if some of you guys are working at McDonald's, sorry to bash on you, but you're earning minimum wage while he's the one laying back and he's earning the bigger money without having to really do anything. He has a system in place. So all of these require skills. All of these require knowledge. So what do you want to spend most of your time on? Learning how to become an employee or self-employed, or becoming a business owner and investor? Once you understand this, obviously you guys want to make more money. That's the whole point of this webinar. That's why you guys are even here. The right side is mainly where you want to focus on, because that's 95% of the world's wealth. So let's go ahead and continue there. So the 6 advanced strategies used by 6-figure traders to instantly make profit in the Forex market. That's the whole topic here. And by the way, welcome in for those of you guys that are just joining in. This is a live webinar. This is not pre-recorded or anything. And I'm also going to have a recording after this, so you guys can rewatch it later on. So talking about the risk disclosure before I get into any of this. So the service and content provided are educational only. Leverage trading carries a high level of risk, and your losses may exceed your deposit. You must be aware of the risk and be willing to accept them in order to invest in the Forex market. Never trade with money that you cannot afford to lose. No representation is being made that any account will or is likely to achieve profits or losses. Similar to those discussed on this service, past performances of any trading system or methodology is not indicative of future results. Market Masters Academy, its owners, agents, employees, providers, and collaborators are not responsible for any losses that may occur from the use of the service offered. So had to read that just so you guys can, it's law purposes, but let's go ahead and get started here. So the secret number 1 is going to be how to identify up, down, and consolidation trends. Now, stay tuned. I know some of you guys already know how to identify some of these things, but it's good to go through it so you guys can already start understanding some of this stuff. So let me go ahead and I'm going to go ahead and share my screen here. All right, so with the Forex market, the market's going up, it's going down, or it's consolidating. So what an uptrend looks like, it will mainly look like this. Give me one sec. Let me change this chart to training. Okay, I'll just go out here. So for an uptrend market, we're mainly going to see that it's forming like this. Market always comes up, comes down. It usually goes up, makes its pullback coming down. And as you can see here, it's going from left to right. We can see that the market's shooting up. That's an uptrend. Uptrend is also known as bullish market. Then we have consolidation, which looks like this, and also known as a sideways market. It's going sideways, consolidation, not really going up or down, just going sideways. Then we have downtrend market that is forming this. So the way to identify if it's going in a downtrend or uptrend is by doing this. So if I'm going to start it off right here in this area. Let me take off. I see someone accidentally marked up on my screen. Let me make sure to remove that. Okay. So when the market is going up, you can mark off inside of the chart and have it where it's going up, coming down like that, coming up. So it doesn't have to be inside of all of these areas, but you can already, by doing this, get this area here, come down, go up there. So we can see this is going in an uptrend. And for an uptrend, you're mainly going to want to place buys on the low. All of these areas down here, and I'm going to show you guys on the other strategies, but you're going to want to place buys on the lows and sells on the highs of a downtrend. So when this is going up like this, then we can see it's no longer going up anymore. It's starting to drop down like this. So you're mainly going to want to place sells on the highs. All these areas here, all these areas up here are the highs. So you can see for an uptrend, we also notice, I'm going to write this here, uptrend is going to have HH and HL. And what HH and HL stands for is higher high and higher low. So let me drag this over on this side, back to this example, because this right here is an uptrend. This right here is an uptrend. So this bottom, it's considered the low of the market. So I'm going to put an L down there. And then this top here is the high of the market because it's the top point. Then once it comes down, this is a low. This is a high up here. This is a low. So for an uptrend, we're going to notice higher highs. That means that this high and this high, we can notice that this high here is higher than the previous high. So it's going to be an HH up here. And then same thing with over here. It's going to be an HH because it's higher than the previous high. So I'm going to try to knock this off real quick because I want to get through this webinar as quick as possible so you guys can go through this. You guys can also review through the webinar. But so right here, we're going to notice higher low because the previous low was down here. The previous low is down here. This one's higher than the previous low. This one's higher than the previous low, higher than the previous low. And same thing right here. So for an uptrend, we're going to notice HH and HL. All these areas are HLs. So that's for an uptrend. For consolidations, you're not going to see HH or HL because all these points right here are the highs. So it's not going higher than the previous high. And picture that this is even. It's not going lower than the previous low. So it's just a new low. That's consolidation. And then for a downtrend, we're going to notice, I'm going to write this down here. So downtrend, we're going to notice LH and then LL. That stands for lower high and lower low. So all these points right here, you can mark them off. And we can notice that, let's just say this is a high right here. The other high is lower than the previous high. So we can see LH, which identifies a downtrend. Anything with a lower high is a downtrend. And usually it's going to always create another lower high. can see a LH there. Same thing with here. We can notice a lower high there. And then these lows here, we're going to notice, well, let's start this one off with a low. And then we can see this low compared to this one's lower than the previous low. So it's a lower low at this point. Lower low. And then right here, lower low. So to identify uptrends and downtrends, you want to understand higher highs and higher lows to already understand where the market's going. This is going to be technical analysis, and it's like some basic stuff that you should already understand. But you can see when the market's coming up and down, like we can see it comes up like this, and it forms a higher low down here. And then just understanding which way the market's going. So throughout like this whole thing, it was going in a downtrend, forming lower highs and then lower lows, downtrend. Then when it starts creating higher highs and higher lows, that's an uptrend. So always trade with a trend. That's the way to go. That's secret number one. We're going to go on to number two. Let's bring this back up here. So for number two, it's going to be 3 major market patterns to always look for. And these major market patterns are going to be what I use all the time to be able to predict when the market is most likely going to be reversing. I also use other things like indicators and stuff, but for this, I'm going to show you guys the main stuff to look for technical analysis that really helps you out with profiting. So let's exit this. So the major market patterns that I look for, when the market's going in an uptrend, so let's picture this as an uptrend right here. I look for the first pattern, which is called double top. So you can see it's going in an uptrend, and it does a double top up here. So it has one top here, 2 tops here. That's called a double top, and usually after double top, there's a chance that it's going to be reversing. And if you think about it, what a double top is doing is it's not creating a higher high, and then it breaks below, and then starts creating lower highs, lower lows. So it reverses from an uptrend to a downtrend. So for uptrend, for an uptrend, I'm mainly looking for double tops, triple tops, and head and shoulders. Head and shoulder. And I'm not talking about the conditioner either. I'm talking about the pattern here. So double top, which is this up here, a triple top, same thing. Think of it going like an uptrend, except it's going to be doing this, creating a triple top and then starting its downtrend. So you can see it does a triple top, and usually after the triple top, that's when it starts creating the downtrend, reversing on that trade. So when it's reversing, I like getting in on sales on certain areas that are going to help me out with profiting on this reversal here. So that's going to be the triple top, and then head and shoulder. If you see here, this is like a stick figure. So think of this, we got the head here, and then we got like the shoulders here. Right, so the head is the very peak, and then left shoulder, right shoulder. Same thing with this pattern. We have the head up here, and then creating, so we have the left shoulder, head, right shoulder. And if you can see what's going on here, the right shoulder is a lower high, because this is a high up here, this is a lower high, This is a low right here. So we're waiting for another lower low. Waiting for another lower low, and then most likely it's going to create a lower high and then lower low. That's how you predict the reversals. So double tops, triple tops, and head and shoulders are what I look for an uptrend. For consolidations, you don't really look for any patterns because the pattern is just back and forth like this. It's just back and forth. And you're waiting for it to break either up or break down. So that's the head and shoulder pattern. Now, the same thing applies for a downtrend, except it's going to be backwards now. Instead of double tops, we're going to be focusing on double bottoms. Triple tops, it's going to be triple bottoms. Head and shoulders, it's going to be inverted head and shoulder. So like a backwards head, and then backwards shoulders. Where this is like this. So left shoulder, head, right shoulder. So let's go on to that. I'm actually gonna erase this. But are you guys understanding this so far? Put a 1 in the chat box just to make sure that you guys are active, listening. What do you guys think about this so far? A bunch of 1s, awesome. Okay, everyone's listening. Just making sure you guys are active. So let's go on to the downtrend. So far, so good, Brandon. That's what you mentioned. Okay. So I'm about to erase this and then go towards the downtrend. So for a downtrend, we know it's going like this. So double bottom will look like this. 2 bottoms. Normally, after the double bottom, it will reverse. So we got double bottom right here. That's kind of a confirmation that it's going to be reversing. Obviously, there's going to be some extra confirmations to enter the market. That's discussed later on. But double bottom, or there's triple bottom, which would normally go up here. And thinking of a triple bottom, it's just kind of doing this. It's consolidating, right? Not creating higher highs or higher lows. So it creates a triple bottom, and then it breaks through here, and most likely that right there is a confirmation of the reversal. So let me write right here. For downtrends, mainly focus on double bottoms, triple bottoms, and inverted head and shoulder. Head and shoulder. Okay, so we got the triple bottom, and then usually after that, that's when it will be reversing. Now for the inverted head and shoulders, if you guys saw that stick figure, it's just having it backwards. So the head, this middle part, is just going to be a little bit out compared to the left shoulder and the right shoulder. So this would be the head. Since it's backwards now, we're focusing on the downtrend. We're focusing on the bottom of the market. For an uptrend, we're focusing on the tops. This, we're focusing on the bottom patterns. And then we see left shoulder, head, right shoulder, and then it breaks through going towards an uptrend. And those of you guys that had joined in kind of late, there's going to be a recording so you guys can watch the beginning to get more into this part and talk about like the higher highs, higher lows, and everything. So right here, usually it's going to create higher lows and continue that uptrend. So you predict the reversal when it's happening. Those are the patterns that I look for. And then going on to the live market charts. So like up here, we can see it's going in an uptrend, comes down, comes up. Overall, it's kind of like creating a triple top or kind of like a 4 top. Usually it just does 3, but you can see it's consolidating. Right here, it's consolidating. It broke through down here. Right when it broke through, you're getting in for a sell because you know it was going in an uptrend. It formed the pattern, and then it broke through. Once it broke through, it started going towards a downtrend. Same thing with like some of these areas. So as far as the time frame, you can use this on any time frame. Some of you guys don't know too much about the time frame because you're like brand new, but there's like, it's basically the same thing. It's just you can see it from a farther perspective on a bigger time frame. So this same area, you can see it on the 1 hour. I normally like using the 1 hour to look for these patterns. Sometimes even like the 4 hour or daily is what I look for. But back to this 15. So where's that area? So right here, even inside of these areas, like we can notice it's going up, creating like a triple top right there. It has like an area where it's not really breaking, and then it goes down. Actually, this is more like a head and shoulder pattern. We can see this one's a little bit higher, and then right shoulder, it's just a little bit higher. And then it starts reversing. So same thing with like the bottom. We can notice like down here, it's creating a triple bottom, 1, 2, 3. And what happens after that? Market starts going towards an uptrend. Yeah, so it goes towards an uptrend. Now look at this. This is where I see the double top up here. We see it's going up, down, up, double top, right? Then market drops down. And then this whole area, you can see it's kind of like consolidating. Not really going anywhere. And then it breaks above, continuing higher highs, higher lows, and continuing the uptrend. So focusing on those patterns is what I'll mainly be doing. Let me try to find some head and shoulder patterns because I didn't go through that. We covered some double tops, head and shoulders. I'm gonna try to make this webinar quick, but giving you guys as much value as possible. So let's see. I'm gonna try to find some head and shoulders. So right here, this is a head and shoulder pattern right here. We can see this is a point here, this is a point, and then this is a point here. If I do my line, it goes up there, down here, up here, down here, up, and then down. So left shoulder, head, right shoulder. What happened after that? Market broke through, started going towards a downtrend. And we can see kind of some consolidation around here, but we see that downtrend happening. So that's a head and shoulder. Let me try to identify an inverted, which actually right here, I noticed a triple bottom. If you guys see that. Triple bottom. What happens after that? Market shoots up. I see another head and shoulders right here. Left shoulder, head, right shoulder. And then it starts shooting down. I noticed a double bottom right here. 1, 2, and then goes up. Double top right here, goes down. Double bottom here, goes up. Okay, so this right here is kind of like it. We can notice the head, left shoulder, and then this area right here, kind of like it's right shoulder. And then market shoots up. There's usually some better ones. Let me try to find a much better one. We see double bottom here. Let me go on to the daily and then try to find this here. Okay, so right here, this area here. So we see like this side over here is like the left shoulder. This is the right shoulder. I mean, the head and then the right shoulder there. So after we notice that pattern, market shoots up, doing that reversal. Now, there's certain areas that I'll focus on. I don't want to get too much into detail on that because that's going to be a little extra. That's going to be a little extra. It's going to take a while to really fully explain all of this because we still have some more secrets to mention. Let's see. Charlotte, you said, I think with the shoulders, because at the head, one knows not yet whether it goes bearish. Yeah. So with the head and shoulders, it is because people think that you don't necessarily get in for the sell right when you notice the head. Because for a downtrend, I focus on the top. So we'll get more into like support and resistance in a bit. But this is the market patterns that I'll mainly focus on. Let's go on to the next part. The next part of the slide, which is going to be how to market charts like a pro. Okay, so let me put this one on here. Okay, so how to mark your charts like a pro, that's going to be number 3. So this part is a really good part with everything that I just mentioned already with the higher highs and higher lows. It's going to kind of combine it together and you just have already a strategy that you can already start using and then profiting. No areas to place buys, no areas to place sales. So how to market your charts like a pro. And by the way, all of these strategies, you can use it for any market. I mainly do the Forex market, but I do some stock trading as well. I do cryptocurrency trading. All of them have charts. You can apply all of this to it. So mark your charts like a pro. So when the market's going in an uptrend, we know it's like creating higher highs and higher lows. So I'm going to go through what's called support and resistance. And for support and resistance, write this here, support and resistance. For this, there's support and resistance horizontal, and then trend line support and resistance, which is like kind of vertical support and resistance. So think of support as the floor. Think of resistance as the ceiling. Okay, so right now you're probably inside of a building. I don't think anyone would be outside right now doing this webinar, but you're in a building, you have the floor under you, and then you have the ceiling on top of you. If you jump up and hit the ceiling, you're most likely not going to be able to break through. It's going to make you reflect back down. Same thing with the floor, you can't really break through. So it's an area that is hard to break through. So with support and resistance, it can break through, but we have the support, which equals the floor, the bottom, right? The bottom of the price. And then we have resistance, that's the ceiling, which is also the top of the price. I like calling it ceiling. I like calling it floor. It just makes it easier. Just to explain it to you guys, understanding the floor and the ceiling, but understanding that the floor or the bottom of the price is a support, and then the ceiling is a resistance. So the bottom of the price is support. So let me mark off all these points here. So these areas here are the bottom of the price. And then these areas up here are the top of the price. So for support and resistance, there's horizontal and then there's trend line support and resistance. So trend line support, or we'll start off with horizontal. So when I mentioned higher highs and higher lows, That's the same thing with support and resistance. This low is support. It's the bottom of the price. This low here is the bottom of the price. This low here is the bottom of the price. Same thing with up here. So this is support, this is resistance. So when the market is breaking through, it's breaking the ceiling, and then think of it like a building. So I'm gonna draw out a building right here. A little figure of a building. And inside of buildings, you have multiple floors. And each one of the floors have its ceilings and its floor. So when the market's going in an uptrend, something about this area is going to make it reject down because it's going to be hard to break through. That's resistance, back down. And for an uptrend, it will break resistance and then go to a new resistance, and then usually come down to the floor, come up to resistance. Once it breaks through, comes down to the floor, breaks through resistance. And for an uptrend, it's mainly always breaking resistance. It's just breaking resistance levels for an uptrend. So for this part here, so since the market moves from left to right, it's going up, coming down. It's going to break through the ceiling. When it breaks through the ceiling, we're looking for a new resistance area, which is right here. But now the previous resistance is now the support. It's the floor. So market comes up, comes down to the floor. Now it's coming up. We're looking to see if it breaks through this resistance. And if it breaks through, that just means it's creating a higher high. And then not always will it come down to hit the support, but you have an area of reference where it'll come down and then most likely in this area continue to come back up, creating higher lows and then higher highs. Now, we're just mainly going to focus on the horizontal for now. But when market is consolidating, this is what it's doing. It has an area of resistance at the top, and it's not breaking through. So it has resistance, then this bottom is support. Back up, resistance, back down, support. And we're looking for it to break support to know that it's going in a downtrend. There's a really high chance of it going from a downtrend because now it's most likely going to create a lower low. Now, with support and resistance, these lines, we can extend it, and usually this is going to be now the new support level. And then when it comes back up, this is the resistance level. So same thing with the resistance. It doesn't always come back up and touch it and then reject. Sometimes it might stop here and then continue to go down. But usually it will hit this area and then go down, and we're looking for it to break this low, which is also support, and come back down. Now the next target is going to be this level here. So we'll see it come down to that support, back up to what was once support is now resistance, the ceiling. Okay. So we have resistance, and then you just mainly see lower highs, lower lows. Now this is horizontal support and resistance. Let's look at the chart, and after we look at the chart, I'm gonna go on to how I look at it from a trend line support and resistance. So on the chart, for beginners, what I would recommend is starting off by doing this, where you'll mark off like these areas where it'll come down, come up, come down, and just marking off like this inside so you kind of have an idea. So we can see market comes up, this level is like an area of resistance. And there's a tool on here that's called the horizontal line. So if I mark it there, this is like resistance. And then down here, this is like support. You can see it hit once, twice, and right here it started creating a higher low. This area up here is like resistance, which also this resistance here, if you look at the past, on this side, it's resistance as well. Let me put my annotation tool to make it a little easier to see it. So resistance here. And you can see it was playing as support down here as well. And then when it broke through, it was playing as resistance because it's like a new level on the floor. So you want to understand what level you're at and then see which way the trend is going to really start predicting the areas to get in. So like down here, this level here is like an area of support. So if ever the market did come down there, I'm looking for a rejection right at that level. And then coming up to resistance and then, giving me areas that it should be rejecting off of. So like for up here, we can clearly see it's in an uptrend. This is a high, this is a low, this is a high, this is a low. Most likely, it might be creating a high. Now, for this one, we do see that it's like a resistance level up here. So it is rejecting off resistance. We're waiting for it to break through to go to another high all the way up here. Right now, most likely it's going to be dropping down to this level down here. There's a really high chance of it dropping down to this level because it's failing to break this previous high. It's just going up here, coming down, coming up here, which is kind of like forming that double top pattern from a bigger perspective and then coming down. And then if it comes down here, we're either looking for that rejection or breaking through and then probably down to like these levels and then continuing the downtrend. So these are patterns that I'm looking for. Charlotte, awesome job. You did mention the head and shoulder. This is a head and shoulder here. And for patterns, there's patterns inside of patterns for sometimes. Like actually almost all the times there's patterns inside of patterns. So on a bigger time frame, you'll notice a double top, but on the smaller time frame, you'll notice like a head and shoulders for like the right top, if that makes sense. So head and shoulder, and then it's reversing now. But if I go on the bigger time frame, like if I go on the monthly, and if I look at this area, it's like creating a double top. 1, 2, rejection. So that's what I mean by bigger time frame. But monthly, weeklies, that's really far behind. So head and shoulder, then you notice that reversal happening. Usually for this one, I know areas to be able to get in, which I'm gonna cover like support and resistance on trend lines. But right now, we're waiting for this to fully break through to really start getting in for sales. And this is just on one pair. The same strategy applies to all pairs, all markets. You just use it all over the place. So it's already there. We kind of identified a setup. And let's see. So that's the support and resistance. You can even see with these lines, like this resistance here, if I look back here, we can see it came down to this support, came up to this resistance. Came down to the support, you were seeing some reaction off of the support because it's the floor. And then it finally breaks through the floor, comes up like resistance, and then comes down and breaks through to a new support down here. And then up to resistance, down to support, up to resistance, down to support, resistance, support. And then right here, you see a bunch of reaction off resistance, up, come down to support, up to resistance. And it's just bouncing off support and resistance. Think of that building. It's just going to new floors. So there's floors inside of floors, but when you understand the bigger time frame, you can go like a sniper. And with my training, I talk about like a sniper method where you'll look at it from far away and you'll zoom in and get closer and closer to get that perfect entry. So that's the support and resistance on here. And by the way, I'm gonna go on to stock. So this is out of Forex, but to show you guys that this works on anything. So let me look up Apple. And you guys can already see I have like some markups, which I'm gonna mention to you guys support and resistance on like uptrends and downtrends, but like looking at this right here. So you see there's a resistance right here, and then it breaks through. And then we have like a support level down here. Now, that was a resistance level, which market didn't come up and hit it, but not always will it come up and hit it like I mentioned. Sometimes it'll go before the entry. So you see that support that I drew over here was once resistance up here. And you can see I already drew my resistance line here. It helped me predict, let's see, like over here, it hit like resistance here, bounced down, then broke through. And then on the bigger time frame, like we can just see high, and then this is a lower high, higher low, and then right now it's creating a higher high. Right now, it would not be a good idea to buy the market because it's at its high point. You want to buy the market when it's creating a higher low. Higher low. You buy it here. Most likely it's going to create a higher high. And then you can exit out when it's at like the top. Or if it breaks through, that's where you'll be looking at the breakthrough. If it goes higher than the previous high, then you know it's creating higher highs. But if it does this, now it's a double top, there's a chance for a reversal now for it to break through. And if it breaks through, now we know like some areas of support and resistance where it might do this. Okay, so does this make sense to you guys? Put yes on the chat box if it makes sense with support and resistance on horizontal. Nice, we got a C on there. We got a C in Spanish. All right, we got like over 20 yeses in like that quick second. Okay, awesome. So you guys are understanding. Good job. That's great. Getting more yeses. All right. So all of this applies to any market. I can go on to Euro USD, a currency pair. You're looking for the same thing. And by the way, I did like a markup here. If I zoom in, this is when I was predicting. So before it happened, I had wrote this out. Left shoulder, head, right shoulder. I predicted it was going to reverse. So what happened? Left shoulder, head, right shoulder. Market did go up. Overall, it was in a downtrend, but you can catch these trades and just quick pips, make your money, get out, and that's pretty much it. So yeah, you can notice support and resistance even right here where it created the head. That was support, resistance up here. And then market broke through the floor, came back up to resistance. Now look, the new floor is down here. What happened to the market? It came down, came up to resistance, and then came back down, breaking through this support right there. Now we can see the market opened and now it's above this support. So there's a chance, and I think that the market will be going up. It does have to give me some more confirmations though, like inverted head and shoulders or triple bottom, double bottoms, all that stuff. That's what we're looking for. So let's go on to what I was mentioning with this right here. So support and resistance. I was doing this on the daily. Okay. So support and resistance, that was horizontal. Now we have support and resistance on a trend line support and resistance. So what trend line support and resistance, there's a tool on here that's called trend line. And remember, support is a floor, resistance is a top. So all of these bottoms here, and that's why it's good to identify like the higher lows, because you know where these points are at. Higher low, higher low, higher low. You connect all the higher lows, and now you have a support line. So I'm gonna make this color a different color. Let's see. Style, I'm gonna make it red. All right, so we have this support line that you can see market is bouncing off, bouncing off, bouncing off. And then when it breaks through the support, now the support is now resistance. Just think of the building, but now tilted sideways. So this building is tilted sideways. So resistance is the top of the price. So all these tops, that's resistance. And then we have support. So this is how you find it for an uptrend. You get all the bottoms being support, all the tops being resistance. Once it breaks through support, usually it might come up to resistance and then continue to go down. So for a downtrend, same thing. You're getting all the tops. So all the tops is now going to be resistance. The top of the price is resistance, the ceiling. Then the bottom of the price are all these levels, and that's going to be support. So if the market comes down, now we have another area where it might hit, reject, and then we have a resistance. So you can see how all of this kind of aligns perfectly. And that's because I perfectly drew this, but the market won't always give you like this perfect of a setup, but it's always good to know support and resistance. So like right here, I already drew out this support. We can see all these bottoms. Just by drawing this point and this point, I was able to predict here. I'm able to predict here. And then we can see right now, it broke through support. So most likely, what is it going to do? It did like it inverted head and shoulders. Most likely, it might come up to resistance and then come down. And then now we have a new resistance. And then wherever this drops, it will be like a support. Now, get this key thing. For an uptrend, I focus on support. For a downtrend, I focus on resistance. And I focus on them so I know which areas to buy. Because you do want to trade with the trend. If it's going in an uptrend, creating higher lows and higher highs, you want to buy the dips. And that's the key right there. So I'm going to write this here. Buy the dips, sell the tops. So the dips are all these points where it's coming up, coming down, that's a dip right there. Coming up, coming down, that's a dip. So you buy all those bottom points, because when you buy here, most likely it's going to go up. Buy here, it's going to go up. Buy here, it's going to go up. Then we notice a pattern up top because it's hitting off resistance, not allowing it to break through. And then it started going down. So overall for this, I'm not placing sells yet. This isn't where you place sells. You place sells when it comes up, creating a lower high, and then it comes down. Once you see it's rejecting down, you can like take profit here. You can take profit in other areas. And there's some more strategies to that. In this webinar, I can't go through all of it because it's way too much. And I do have some more training later on if you guys want to extend your knowledge to like the next level on top of this. I'm giving you guys the key things, but if you want to extend it further so you know exactly like when to enter and exit, you can already know when to enter and exit with this, but when you take it further, you'll get like those precise entries. So anyways, creating higher highs, once it creates a higher low, you can get in right there once you see that reversal. So that's with that. Let's find a different example. So like in this area here, if I draw my line, I would have been able to predict. And the way to draw the line, you connect 2 points, and then in the future, it will help you predict probably the third one, the fourth one, until it breaks through. Then it's no longer on that trend line support. Now it's resistance. So let me go on to a different pair, Euro USD. So like for this here, we can see it was going in an uptrend. Once I connected this point and this point, it helped me predict that point there. What would I do here? I would buy because I know it's creating higher lows and it's also creating higher highs. So most likely it's going to break through and then continue. But if I do my resistance line, like a trend line resistance, it looks like that. So you can see price did hit off of it and then rejected. But also horizontal. So my horizontal would look like this. You can see over here, it was playing like support. Over here, it hit like resistance. Price broke through, came down, support, broke through. And then even if I drag this resistance line, it kind of like came back down to around that area and then broke up. So there's support, resistance, but also the support and resistance can change its angle. So this is like a smaller degree angle, but then it could be a stronger uptrend angle like this. That's a stronger uptrend. So it helped kind of predict this area, these levels here, this area here, and then we can notice it created like a head and shoulder. Head, left shoulder, right shoulder, broke through the support, and then started going towards a downtrend. Once it went towards a downtrend, look at this. I connect this point and this point, and it helped predict all of these points here. These would be areas where I'm placing sells because I know it's going in a downtrend now. Then it broke through, then it was going towards an uptrend. So for an uptrend, I focus on support line. For a downtrend, I'm focused on resistance. And then we could see it broke through. Now it created a higher low, so I adjust the support line. You see the angle is different now. This angle was sharper going up, and then right here did create a higher low. And then we have all of these areas that it kind of predicted. Right here, here, and here. And if I drag it further, it kind of predicted that resistance when it came up, a couple resistance right here. And then back to this right here. We have resistance here. Resistance, resistance. So if price ever does go back to that area, let's say price does shoot up to here. I'm looking for a rejection off of resistance because overall, it should probably go in a downtrend. And then on the bigger time frame, We might even notice this. Left shoulder, head, right shoulder. This being like the whole resistance area right there. So I know it looks a little confusing, but as long as you focus on support and resistance, that should already help out with being able to profit with Forex. So support and resistance is all over the place. You can see I'm drawing my resistance line right here. It predicted a bunch of areas here, and it predicted the support and then bounced up. Same thing with this uptrend. It predicted these levels here where I would be placing buys. This right here predicted the resistance and then down. So this is all over the place. You can apply this every single market. Same thing with stocks, everything. Some of them are tighter than others, like these. Pretty tight here, and then you can like adjust it. And then adjust it because that was a really strong downtrend. So that's all the support and resistance is helping you out with. It helps you understand where the trend is going and then where to be placing buys. All these levels right here are buying entries. Okay. Give me one sec. I'm gonna get my phone real quick. Now I'm gonna ask you guys one question once I get my phone. Okay. So I'm gonna post you guys on my story right now. But if you guys are enjoying this webinar so far, all the value, post on the chat, mention like if you're liking the training, any comments that you want. Obviously probably not negative. But if you guys are enjoying the training, write in the comment section. Bastante bueno. We got some Spanish in here. Love the training. This is worth it. This is amazing training. Love it. Awesome. Awesome. Thank you guys. I'm giving you guys value. Thank you for the feedback there. Thank you for the feedback. You guys will be posted on there. All right. So let's continue here. Man, all of you guys just continued. Holy shoot. Hold on. Okay, so the comments continued. We got like some beast mode. I can smell the money. Very helpful. A bunch of comments. Thank you guys. All right. Awesome, you guys. All right, let's continue here. So this session is key, man. You guys are that makes me very excited. I get some happiness from helping out people. That's why I created the Market Masters Academy. Why I created the business is to help out as many people as possible, because I know people are living paycheck to paycheck. So definitely this is something that anyone can do it. I'm 23 years old. Some of you guys might be older, younger, wherever you're at, age doesn't matter. I actually wish I would have started in high school or even earlier, middle school. So I would have been more advanced now. But it's better starting now than never, right? So you guys are definitely why I do this. So let's continue here. All right. So support and resistance on the trend line is really helpful for me. I'll use this all over the place. I can pull up any pair, GBP, CHF, and you can already see with me like support line, would have been able to help predict these points here. And then right here, I could have adjusted. So right now, check this out for GBP CHF. So we have support line here. This is an area where it's expected to reverse. So that's a support line. Not only that, like we have, let's see, if I do my horizontal line, you can see this resistance here was playing as support. So this area could have been kind of predicted there, but let's see, right about, yeah, this line here is like a resistance, kind of like support up here. You can see it breaks below, hits resistance, breaks below. So we have a couple support and resistance levels already there. So right now it's at a support trend line. Now, once you go onto a smaller time frame, you'll be able to really start seeing what's going on in that area. That's how you look from far away. See, like on the 1 hour time frame, I have resistance line. See all these areas that could have been sale opportunities. And then right now, based off of the smaller time frame, this is like a support area. You can even see some rejection here. And then what you're really looking for is for it to break through. Because now we know it's at a support trend line on the bigger time frame. You're looking for that breakthrough, and there's a higher chance of you profiting if you're entering when it breaks through, because it's already on a support line. And on the bigger time frame, it's an uptrend. You can see uptrend. Everything's creating higher highs. Even though if it broke through this support, it still has areas of support here where it's creating higher lows anyways. So that's out with secret number 3, how to market chart like a pro. We're going to get on to risk management right now. So I'll just show you guys this this slide here right now. Why not? So number 4, risk management. Thanks for hanging in there. I know we're already almost done. We have like 2 more left. These are going to go through kind of quick. It's more on the things that are kind of necessary with trading, because you have strategies, but you also want to have like the mentality of knowing and having the right plan. Because if you don't have the right plan, it's like the saying goes, something like fail to plan and you're planning to fail. That's basically it. Fail to plan and you're planning to fail. So you want to make sure to have a plan in place. If not, you are most likely going to blow your accounts, lose money, and that's what we don't want here. I don't want you guys to already start using these strategies and losing money. So definitely you want to practice over and over these strategies. And these are just some of them. There's some more that are involved, but these are going to be the 6 main secrets that I use. So risk management. Now for risk management, I'm going to erase this markup. There's going to be different ratios that you can use. So there's a tool on here, which you can find it. You can find it right here where it shows like long position, short position. I have it where it's saved on top of here. So if I click on it, it looks like this. So the red box, the red box indicates like what you're willing to lose. So let's say if I have this like this, we have the red box. So if the price comes all the way down here, it's going to hit like a stop loss. And then the green box being what you're going to win if you hit that target, which, you know, if you guys are inside of my signals, I talk about, I have like stop loss and then take profit levels. So stop loss, take profit. Now there's there's like a 1-to-2 ratio. A 1-to-2 ratio is, even if you're a 50% winning trader, which you'll obviously want to make more than 50% winning trades. 50% is you win one, you lose one. If you win one and lose one, but use a 1-to-2 ratio, a 1-to-2 ratio is like you lose $50 to gain $100. So for this, I'll just make it like the coordinates. I'm gonna put like 500. Let me actually make this bigger. So 5,000, 10,000. So this right here is a 1-to-2 ratio. Let's say if I was to place the buy there, that's a 1-to-2 ratio. Now, this is a lot of pips like really far away, so I don't recommend this long, but I'm just showing you guys the example what a 1-to-2 ratio looks like. A 1-to-1 ratio would be even. So like if it's 10,000, the other side would be 10,000 as well. That's a 1-to-1 ratio. It's even boxes. So the better your risk management, the better you'll become with placing your trades. And you can become a 50% winning trader and still be profitable. Because let's say you lose $50, you gain $100. So your first trade, you lose $50. Your next trade, you win $100. That's a 50% winning trader. So now you're $50 in profit. You're always going to become profitable if you have a good risk management plan. So 1-to-2 ratio above is obviously what I'd recommend, because that's how you start profiting. If you're below a 50% winning ratio, then you should definitely adjust your strategy. Something that you're doing is definitely not working if you're not above 50%. So as long as you're above 50%, you're fine. A 1-to-3 ratio for this is going to look like this. It's going to be 25. Yeah, it's going to be like this. This is a 1-to-3 ratio. Yeah, 1-to-3 ratio. So you can lose, it's like losing $25 to win $100. That's a 1-to-3 ratio. And then like 1-to-4, you will, as long as the green is bigger than the red, that's what you want to do. So risk management is definitely important, and areas to place buys, like let's say just off of teaching the support and resistance. So let's say like right here, we have resistance line. Just by predicting these 2 points, which actually kind of predicted a little further, but let's say you're getting in for a sell right here. So I'm gonna put the sell, there's a short position, which means it's going down. So if it's going down, I'm most likely gonna wanna put the stop loss above this high, because if it breaks above this high, now it's creating higher highs. So it's no longer in a downtrend. That's just areas that I would place it. But if you start noticing that reversal happening, like let's say on a very smaller time frame, you notice it breaks like a support and then it starts going down. So you'll see it come down. Let's say for this, I'm gonna put this at 1,000. So a 1-to-1 ratio would obviously be, you catch it, you can lose 1,000 pips, or you can win 1,000 pips. That's a 1-to-1. But you want to have more than a 1-to-1 ratio. You want to have, you want to be able to profit more money from that. So let's say if this one was a 1-to-2 ratio, so lose 1,000 or win 2,000. So you would have been able to get in on this sell and made your profit. Now, greed and everything is involved as well. Like you can take your profit at the 1,000 level, or if it's like at a support level, like this area would be area that I would take profit right there. Because I know that it's like a support level over here. So there's a chance that before it hits the take profit, it might hit this area and then shoot up. So that's why I'll keep in mind some of these things. Like I'll even keep in mind this resistance up here and watch it to see if it's bouncing off of this area. Because if it's bouncing off, I'll probably take profit. But if it continues to drop down, then I'm targeting the next level. And then I probably adjust stop loss above this area here because it's resistance. It's going to take some more training for understanding like where to place a stop loss and take profit, but I would place it above resistance and then continue this towards a downtrend. And as long as you do this, 50% winning trader, you're still profitable. You're still making money. You still can have, you still can start predicting your income as well. So, which leads me to the next part of the training. It's going to be predicting your income. Actually, it's going to be my trade goal plan. So I'll just put it on here for this part. So number 5, my trade goal plan. Secret number 5. And remember, you want to plan something. So this is a plan that I use every single time. And this plan consists of catching 200 micro pips. So 200 micro pips is this amount right here. Profit 200. Let's say I keep this at a 1-to-2 ratio. So this is how little micro pips I'm focused on catching every single day. This small amount. And the reason why I catch 200 micro pips, I'll even do more than that sometimes, but focusing on just 200 micro pips. Because not every single day is a market volatile. Not every single day will give you a good setup to place your trade. But if you're catching consistently 200 micro pips, that's something that's reasonable and you can catch it within like 15 minutes. Like if I go on the 15-minute chart, for this one, let's see, it took longer than, hold on, this is, yeah, so for 200 micro pips, like that can happen 30 minutes, or like right here, that was like 15 minutes, maybe around like 20 minutes, and then it hit the take profit level. So 200 micro pips is my trade goal plan. When you consistently catch 200 micro pips, that's when you can go on to secret number 6, which is being able to predict your income. So also with my trade goal plan, so I'll focus on 200 micro pips, 200 micro pips, but based off of your account size, so each one of you guys have different budgets of what you're willing to start off with. You can start off a trading account with as low as like $50. But let's just do this like a 1.0. So, sorry, $100. So $100, you put on here equity in the account. So if you have a $100 account, what I would recommend for the max lot size is going to be a 0.10. So 0.10 lot size, that's what I recommend max with a $100 account. So you don't want to exceed 0.10. If you're placing 2 trades, you're just going to divide this in half. So 0.05 for one trade and then 0.05 for the other trade. If you're doing 4 trades, it's like 0.02 for 2 trades or 4 trades. But for $100, you do 0.10 max. For once it reaches to 250, after 250, so actually let's do this with 200, you're going to be putting on here for the max lot size, it's going to be 0.20. And in a bit, you guys are going to start understanding why I come up with these numbers. So 200, 0.20. Then once it reaches the 250 mark, that's where you only increase every 250. So from here, you're just going to do 0.25 max on the lot size for a single trade. That would be the max. And then the next target that you're waiting for is a 500. So at the 500 level, you're doing now a 0.50 max. So if you're doing 2 trades, that's 2 0.25s. And by the way, for those of you guys that had joined in late, there's going to be a recording of this. I see some people are messaging that joined in late. There will be a recording. So for the 500, once it reaches 750, you increase to 0.75. Can anyone guess the next area where you would increase the lot size? Write in the chat box if you guys can guess what account size you would need and what max lot size. Okay, awesome. You guys are getting it. $1,000, 1 lot. Yeah, we see 1 lot. It shows from Anonymous. He said if you answer, you're cheating. Probably because you've taken the 7-day training. That's probably why. Oh, Marcos, yeah. So it's $1,000. It's going to be a 1 lot size, a 1.0. So then now once it reaches the $1,000 mark, you're going to want to increase every 500 micropips, or sorry, $500. So once your account reaches 1,500, that's when you'll increase. Not when it's at 1,250, at 1,500. And then the max lot size for this would be 1.5. So I see okay. So let me see. So at 1,750, you're not increasing the lot size. You're waiting for this to increase another 500. So let me kind of separate these so you guys can get the hang of this. So once it reaches 2,000, that's when you'll increase the max lot size to use. Once it's at 2,000, you're now using a 2.0 lot size. That'll be the max. So if you're doing 2 trades, that's 2 trades at 1.0. Now, obviously the risk management and this ties down together as well. Because if your stop loss is like, let's say 1,000 micropips away, and you're doing a 1.0, that means you can potentially lose your entire account if your risk management isn't good. Because 1,000 times 1.0, that's $1,000. So you obviously don't want to do that, but That's why with my plan of catching 200 micropips, you can stick to this plan, do higher lot sizes, and become a profitable trader. So can anyone guess the next one that would come after this? Actually, before you guys guess, I'm actually give you guys a test here. So if the account is at 2,250, what would your lot size be? Okay, perfect. Schoolboy, you got that wrong. Not to point you out, but it's everyone's pretty much getting it right. So 2.0, yes. So you increase every 500. You want to wait until this changes to 2,500 to then increase the lot size to 2.5. So you're going to continue trading using this lot size, and then once it reaches to 2,500, that's when you'll increase the max amount to 2.5. And then you guys will see that as your account increases, the amount that you start making daily will increase, obviously. And it just starts compounding. There's a really good book called The Compound Effect. I forgot who the author is, but The Compound Effect, it's kind of what's going to be happening with your accounts. It's just going to continue compounding over and over. So 2,500. Now, let me give you guys a harder test right here. If your account is at 9,950, what lot size would you guys be using? Steven, you said, when do I hit the LV store? I just recently went. Yeah, let's see. Schoolboy 9.5. We got a bunch of 9.5s. I see some 9.0s. Okay, so the majority of you guys, Jamil said 10.0. Carlos said 5.0. No, so it is 9.5. So those of you guys that said 9.5, correct? 9.5, and the reason for that is because throughout this entire thing, you're increasing every 500. So at 9,500, the lot size is going to be 9.5. You have to wait until it gets 10,000 to change this to 10.0. Okay, so Charlotte, you said if you have a 1K account and trades with a lot, you lose 200 pips. So you're saying it's 1/4. So it wouldn't be 1/4 of your account. It would only be 1/4 of your account if you're doing a 1-to-1 ratio. So you're planning on having like a 1-to-2, 1-to-3 ratio. So it won't affect too much of your account. And you want to be more than a 50% winning trader. Even if you're at 50%, you're still profitable. That's the whole point that I'm trying to get at. So you're not focused on a lot of pips. You're focused on a short amount of pips, but you just make your profit, you get out, and you're done with the day. So now I'm going to get on to secret number 6. And let's see. David, you said ratio. So normally I have like a 1,000 or a 1,500. I do have some recommended brokers. If you guys want to get like the brokers that I use, just send me a message on Instagram or wherever, and I'll send them over to you. But some of them are like LMFX, Traders Way, Oanda, FX Choice that I'll be using. So on to number 6 now. And you guys are awesome. For those of you guys that are sticking through this, I see that people are just joining in and joining in. Only a few come out, probably because they have some stuff to do or things that are important. But most of you guys have been sticking to it. So number 6, how to predict your income in the Forex market. This is the best part because obviously the strategy, but what you guys are really here for, you guys are here to make money. So obviously that's why I got into Forex trading. I wanted to make more money. I had quit my job and I got into Forex trading, and definitely this is where you want to get into, being an investor and a business owner. Once you guys start doing that, get towards the 95% of the world's wealth, okay? So number 6, how to predict your income. And remember, 200 micropips is what you're focused on. So depending on your account size, let's say if you're catching 200 micropips a day, which is the game plan. You're catching 200 micropips a day, but your account size is going to be, let's just say 500. You start off an account with 500, which most of you guys can most likely probably start off with 500. So once you start off with 500, catching 200 micropips, let's look at this over here. So 500, 0.50. So now it's 0.50 times 200. So 0.50 times 200. Oops. So for this at 0.50, catching 200 micropips, that's going to be $100 that you're making daily. $100 a day, which equals to $500 a week, because the market's open 5 days a week, 24 hours. So $500 a week, that's $2,000 a month. So you guys will see by the end of the week, you'll already be able to increase the lot size if you're consistent with catching 200 micropips. So with the micropips, I like saying micropips because some people will get confused with like regular pips. It's actually 20 pips that you're catching a day, which you guys that know pips and micropips, it's not that much. It's like moving the price from 500 to 700 points. So 200 micropips, very possible, can happen real quick. That's why I said it can happen within 15 minutes. That's why I'm trading like 1 to 2 hours a day, and that's it. So this is with a $500 account, but at the end of the week, since you're making $500 in 1 week, if you stay consistent, now your account's going to be at 1,000. So at 1,000, now you're doing a 1.0, catching the same amount of micropips, and now your income is obviously going to be increasing. So 1.0, now your daily revenue, daily income is going to be 200. Weekly, it's going to be 1,000. Monthly is going to be 4,000. Some of you guys can already start quitting your jobs with $4,000 a month. Okay? So understanding the power of this, once you're at 1,000, by the time you increase, so you're waiting till it hits 1,500 to then increase to 1.5. So at 1,000, making $200 a day. So in 2 days, your account's at 1,400 if you're consistent. So you don't increase it yet. So by the third day, when it's at 1,600, you're increasing to 1.5. That's in 3 days. So I'll just make this 1,600, and then you're only doing a 1.5. Now 1.6, 1.5, catching the same amount of micro pips. Now your income's going to be increasing, and that's the whole point of the compound effect. Now, instead of waiting a whole week to change the lot size, now you're waiting like 2.5 days, 3 days to then increase. And then the days start getting shorter when you start increasing the lot size. It'll start getting to the point where it's like one day of trading, and then you'll increase the lot size. And then the next day of trading, you'll increase the lot size. You just do it every single day. But you want to obviously be comfortable with your trading as well, because you don't want to do 100,000 doing 100.0 lot size, because then mentally you'll probably start getting scared of your trades. There's methods behind that with like slave and master accounts. That's more into like, that's more detail that I can't really get too much into right now, because that'll take like a whole other lesson for that. So for all this stuff, I'm trying to cover it so you guys can already start getting the gist of this. So 1.5 times 200 micropips, you're making $300 a day. $300 a day, that's $1,500 a week. Oops. $1,500 weekly, and that's $6,000 a month. So I know some of you guys want to get to that point where you're making six figures. This is how you start getting towards the six figures. For six figures, you need to make over $10,000 a month. So being consistent with your strategy is what you want to focus on. Using some of those strategies that I already talked about, focus on those. But this is what I've been sticking to. Don't focus on the money. Okay, the money follows. Focus on the pips. All right, and I think I put, yeah. So you just corrected me. I did put 2,500, but it is 1,500 times 4. That's 6,000 a month. So you said how many pips do you need for 10,000? You don't need any pips really. You're just catching 200 micro pips a day. So you just focus on 200 micro pips a day, but catching, but sticking to this plan and then predicting your income. So like I mentioned, focus on the pips and the money follows. Focus on the pips and the money follows. Like I see Keegan, you said, let's make this money by focusing on the pips. Keegan actually just recently tagged me on a post that he made already. The market just opened. I think he made like $160 and the market just opened. So like, and he's one of the students that has taken my training. He's taken like some mentorship as well. So definitely you guys can all make this happen. But focus on pips, money follows. Once your account increases, you can probably take it easy with the lot sizes. Not so high, so you're not too scared. Because it does have to do with psychology of trading as well. So for this, if you want to start making 10,000 monthly, but you're consistent, that means you would probably need about like a $2,000 account. Let's see, 2,000. That's, I'm gonna do this on my head. $2,000 a month, or $2,000 account. So 2 times 200, that's $400 a day, times 5, that's $2,000 a day. Okay, so not at $2,000. I want to say 3,000. So that's 3.0 times 200. That's $600 a day, times 5, $3,000 a week, times 4. That's $12,000 a month. Okay. So Charlotte, I use a 1-500 or a 1-1000 account on TradersWare LMFX. All right, so that's how you start predicting your income. If this was useful, definitely I'm going to be posting about this, and I would appreciate you guys' like personal messages. Anything would be awesome. Now, I did mention that there was going to be a surprise after this. So with this surprise, I'm actually going to select one lucky winner to win $100 right now. It's going to be one lucky winner that wins $100. And also another announcement. So let's see, let me start sharing the slide here. Okay, we're done with the welcome. So we did this part already. So the surprise bonus, giving out $100 to a lucky winner, and I'm going to randomly select right now on Zoom. Let's see. By the way, so you guys can see, I'm just randomly going to select, and the lucky winner is BB iPhone 8 Plus. I don't know who that is. Let me know who you are. You just won $100. BB iPhone 8 Plus. Send me a DM and I'll make sure to send over $100 right now. It'll be through PayPal. So anyways, whoever that was, congratulations. So also an announcement, there's going to be a 7-day intense training. And you guys, this is also a bonus for all of you guys, because you guys will also kind of, it's like if I'm giving everyone $100 as well. So the 7-day intense training, you guys can see it says strategies that can be applied on any market, Forex, stocks, crypto, teaching about the basics of Forex. If some of you guys were like brand new, I'll teach some of the basics where it's like candlesticks, understanding like wicks and like some basic stuff, and then get into more advanced strategies, more into like the indicators that I use, getting into more confirmations that I use for entering a trade. You guys can see like how to enter and exit the market. I'll show you guys which places to enter and exit. You guys have like my risk management plan, trade goal plan, my precise compound plan. You guys will also understand like the time zones to make the best market predictions, how to trade with institutional traders, which by the way, there's institutional traders and then there's retail traders. Institutional traders are trading with the big banks. They're the ones that, because the market is based off of supply and demand, they're the ones that push the market from going in an uptrend to a downtrend. So like some of those patterns that we notice are areas where it's just like consolidating, and then the institutional traders push the market the opposite way. So that's the time zones, how to trade with institutional traders. That's where you make the most money. Understanding how market makers move the Forex market and how not to be fooled. I'm gonna show you guys some strategies that you don't get fooled with what's actually showing you on the chart. And it has to do with some indicators I use. Show you guys how to scalp, how to do some swing trades. Obviously, these are getting more into like some advanced strategies. And then you do have VIP access to me. So you can ask me any questions anytime. You do get that VIP access. You also get my exact templates and indicators, which I'm going to show you guys right now. My exact templates and indicators for MT4 and how to use them. So if you guys don't have MT4 or haven't even opened up a brokerage account, like all this stuff is shown in the 7-day training, but you also get my exact stuff that I use. So this is my MT4 here. And there's some strategies that I use that help me predict when the market's going to reverse. And I can already show right now, when you see a 3, that's kind of a prediction that the market's going to be reversing the opposite way, which that's exactly what happened. Hit this level here, made the 3, market shot up. Same thing with up here. We can see the 3. It did left shoulder, head, right shoulder. Market went the opposite way. But I would be able to predict that very high point. Like if I go back and try looking at other 3s, look, we have a 3 here. Market was going down. Market shot up after that 3. Market was going up. 3 came down. So you guys will get my exact templates, my exact strategies and everything included. You guys can see right here, 3, double bottom, reverse. Let's see, 3 up here, kind of like a double top, reverse going down. 3 down here, reverse going up. So you'll know these areas to definitely start profiting. And I see people already starting to ask for the link to sign up for that training on the EchoFin platform. That's part of the bonus for you guys. So you guys get like $100. So let me bring this back up. So it's going to be, you get the exact templates. I'll also show you guys the OPM strategy, which OPM strategy, some of you guys think that you need a lot of money. Obviously, I've mentioned that you can start off with like $50. With a plan, $100. Most of you guys have that type of money to be able to start trading. But by the way, if you guys are in a different country, because I saw some people from like South Africa or like UK or like, I know there's some people from like different areas. It's not just the same strategy applies to different currencies. So with the OPM strategy, it stands for using other people's money. So OPM, using other people's money, and the way that I use other people's money, now I'm not talking borrow money from your family and friends. I'm talking borrow money from the banks. And when you borrow money from the banks, you're able to lend money from the bank. Let's say if you borrow $2,000, but you can flip that to $4,000. You pay the bank back the $2,000 plus their interest. So maybe let's say $2,500. But now you make like $2,000 profit from that, or $1,900. That $1,900 is now profit money that you can use to trade with. But what I use with the OPM strategy is I'll continue borrowing money, increasing credit score. Even if you're at a horrible credit score, it helps improve your credit. Even with $500 that you borrow from the bank, whatever it is, you just continue doing that strategy to the point where you can borrow a lot of money. So right now I have over $1 million in borrow money equity from the banks because I've been using the strategy over and over again. And also you can borrow personal credit and then you can borrow business credit, which that will allow you to borrow much more money from the bank. So I'll show all of that stuff. And then there's also a secret bonus at the end of that training that I only tell to the students. So some of you guys in here have already taken the 7-day training. You guys know what that bonus is. That's definitely something that it's helping out a lot of people right now. It's a secret strategy to really start automating your income. So this 7-day intense training, I normally have these every 3 months. You guys can see the start dates on Sunday, July 22nd, and it ends July 29th. So you still have some time for this, but for a limited time, because you guys did join into this training, it's like me giving you guys $100. I'm allowing you guys to join into this training. Instead of paying $497 for the training, you guys will get access for it for $397. So it's like giving you guys $100 each, $397. You guys will get full access to the entire training. And by the way, with the training, I can't guarantee that you're going to get success because it's like a community classroom. But if you stick to the training and if you stay consistent, because I'm not doing the training for you. You have to actually show up. I'm going to provide you guys with the knowledge that you need to start profiting with Forex, but you guys will need to study the material. Same thing with what I mentioned today. You guys will need to practice this. So, practice makes perfect, obviously. So you guys want to continue expanding your knowledge with that. And with 7-day intense training, I jam-packed everything inside of the training. So it's all like intense. That's why it's called intense. It's for 2 hours every single day. Sometimes it'll be like a little bit longer. It's from 9 p.m. Eastern to 10 p.m. So about 2 hours from Sunday to Sunday. All the trainings are recorded. You get access to them. And then you also get unlimited access to future trainings. So for people that have done the training, you guys can watch it for the next one. And then the videos will always be there to review. There's also PDF files as well, which I can show you guys what those look like. Let me bring them up. And these PDF files are confidential. You can't share with anyone else. It does have to stay between you and the company. It is some training that I went through and has helped me out back when I first started about 3 years ago. So this is the way to go. Let's see, I'm going to bring it up here in a bit. So you guys will see right here, the major market patterns with some of the stuff that I mentioned, but it will go more into detail on some of these patterns, and it will go more into like where to put the take profits and stop losses, and then some more patterns to be looking for inside of the market and where to target. Like this is just one of the PDFs that's a downloadable. I have like over 5 PDFs that you guys will be going through. There's also like homework assignments that are assigned for the training. So I keep you guys accountable, and my main goal is to get you guys to the 6 figures. And if you guys haven't heard already, I'm trying to get 100 6-figure traders by the end of 2018. So if you guys are up for the challenge, this is something that it's affordable. I reduced it from $497 to $397. So if you guys do want to get access to that, make sure to send me a message. In this recording, I'll also have like a link below that will have that. They'll have the link to that special offer. But it is going to be a limited time offer for $397. This is the first time that I did have it for $397. I've never had it before at that price. This is one time since I'm doing this free webinar. And yeah, you can message me on Instagram on EchoFin. And if you guys have like the business phone number, you can reach out. One of the support members would probably you got to mention that you were inside of this free training. That's what you do have to mention, because if you're anyone else, they don't get access to that. All right, so you guys, that's the end of the webinar. Thank you guys for joining in. Hope you guys got a bunch of value. I saw messages and comments before that you guys were definitely getting some good value. There's going to be some more value inside of that 7-day training. So yeah, reach out to me. Even if it's not about the 7-day training, if you guys need any questions, have any questions, reach out to me. I'm always here to help out. See you guys, and have yourselves a good rest of your Sunday. I know tomorrow's Memorial Day, so you guys have that day off. I'm usually off every day. I don't go in. So let's catch some pips. Focus on pips. Don't focus on profit. Profit will follow. Let's make this money, and talk to you guys later. See you guys.